Hello everyone, welcome to yet another weekly analysis. For this week, we'll be having a recap on what we planned last week and our execution for last week, and then we'll see where the market is going to take us for next week. So I'm going to point out some key points. First and foremost, when you execute a trade, you have to understand that there is work to be done. You see what I'm saying to you right now? There's work to be done. What I mean is this: you have to be able to manage your trades. Trade management is as important as execution and exit. It is very important. There are three key factors. In placing a trade, in executing a trade rather. There is buy or sell. You know, there is the trade management and there is the exit. So entry, trade management, and exit. You see what I'm saying to you? Your trade your if your trade management, if your exit is bad, then your entry is also bad. Everything has to be pristine, right? So for this week, for last week on Euro USD, we had a little falter, with trade management, and that's affected the entry and affected the exit and affected our percentage, our risk to reward. You see what I'm saying to you? So I'll show what I mean. Now on the Euro USD, like we said last week, that we're going to sell, and we sold, and the Euro USD has come into 1.16000. This is the exact same place, exact same price, that we are anticipated to take profit at, right? So it was about a 4 to 1, and then I forgot that whenever we've gotten to 100%, this is the 100% right here, and 100% level is gotten by the Fibonacci, obviously. So swing low to swing high, swing low to swing high. So this is basically the 100%, like it's on the Fib, right? So when I say 100%, you have to understand what I mean, right? So whenever we've gotten to the 100% level, it is important for you to start to watch the market for reversal patterns. Now, even if you do not see reversal patterns, it is advisable to close partials. You see what I'm saying to you? Because whenever the market gets to a 100% level, the higher high, it would react. Now, we do not know how bad it will react. It may react and go against us, and it may react and go for us. So we do not know how badly the market may react, but we know that the market will react, and we do not want to be involved in the reaction. You see what I'm saying to you? We don't want to be involved in what reaction. So on Euro USD, I was supposed to have gotten out, taking partials, but I held. It was my plan and I executed it, perfectly. But for the next trades, I will be managing my trades, because getting out the partials and the market reversing into this area again could have been another entry for me. You see what I'm saying to you? Could have been another entry, and we will use this, this evening star candlestick pattern we see here to execute. Stops to come right above, and then take profit to still be at the original take profit we had planned in the beginning of the week. So those are the things I just needed to say before we get into the video for next week. So for Euro USD, we are focusing on one pair. Yes. Now this is another point. We are focusing on one pair. It is important to understand that when you are trading, you are opening yourself to risk. You are exposing yourselves to risk. So if you are, exposing yourselves to risk, you should look at every trade as a loss. I'm not saying you will lose the trade, but I'm saying you should come to understand that every trade could be a loss, because the only edge we have over the market is not even our trading plan, because our trading plan can fail. Is our is our risk management. You see what I'm saying to you? That's the only edge we really have over the market. The markets are not. They don't care. The market does not know where your price, your support and resistance, is placed at. It doesn't know. All it knows is that it has to fulfill prices. You see what I'm saying to you? All it knows is that it has to fulfill prices. So on the Euro USD, on the monthly time frame, it's the same thing. It's still the same thing, but top down analysis, we have to go from the monthly time frame and work our way to the entry time frames. So on the monthly time frames, we are bearish. You have to be truthful to yourself, and you have to say what you see. It's very important, because if you're not truthful to yourself, you're the one who's going to have to pay the price, and you're going to be taking unnecessary losses, because you are trying to fit in what you do not see. So you have to be truthful to yourself. So structure says that as long as we are still below the last structure, we are still bearish. And yes, indeed, we are still bearish. So on the weekly time frame, I then began to notice that the weekly time frame is giving a reversal pattern. Now we come to the weekly time frame to look for reversal patterns. You see what I'm saying to you? Now, when a reversal pattern is happening at a turning point, You know what I'm saying to you? At a turning point, that is when we take action. That is when our spidey senses, come up, right? So on the weekly time frame, I began to see a double top around this area, and then I noticed that on the daily time frame, we had to come and retest the left shoulder of the break of structure. This is a basic rule we all know. We all know whenever you break structure, like so, uh, higher low, higher high, higher low. Whenever you break, whenever you have structure like this, obviously this is a bullish market, right? And then you break structure like so, just a little bit below the body close below the last low, right? You would come into this level and retest the left shoulder. You see what I'm saying to you? Retest the left shoulder, and then the market will drop. You see what I'm saying to you? This is how it goes. And then we come and retest the neckline and then drop again. So these are basic. This is these are basic entries. So I'm trying to explain it to you right now because that's the exact same thing we did on Euro USD. We're anticipating to drop into the left shoulder like so, higher high, higher low, higher high, right? And then the market came and broke here, and then it became bullish, right? So we are expecting, all right, for the markets to have done this, it has to come and retest the left shoulder. It's a principle. It's a law that must stand. Now, it may not happen every time, but it is important for you to expect it to happen. You see what I'm saying to you? It is important for you to expect it to happen. That is what the trading plan is. It may not happen every time. Your trading plan may even, make you miss a trade, may make you miss an entry because you're waiting for a particular thing to happen. It's fine. The most important thing is this: if you execute a trade that is outside the trading plan and you profit it, it is still a bad trade. We're not on here to make money. You see what I'm saying to you? Money is not the priority right now. You see what I'm saying? Becoming the best that we can become and following the trading plan, that is the priority. When you follow your trading plan, the money comes. You do not follow the money and then your trading plan. No. When you follow the trading plan, the money comes. Right? So moving forward, on Euro USD, we sold into the left shoulder because we were bearish on the monthly time frame. A perfect trend is a trend that is moving in the direction of the monthly time frame. The monthly time frame is the overall flow of the market, right? And then we come to the weekly time frame, to the daily time frame, to structure our trading into the direction that the monthly time frame is headed. Now, the monthly time frame may be heading in a specific direction, and the daily and the weekly in another direction. It always happens. You see what I'm saying? Because the market's trend 30% of the time. Now, when that's happening, I would advise you to leave the pair alone because we need the best pairs possible. I am telling you, because I'm talking from losses, I'm talking from mistakes. You need, because over time you will understand that over time that is when you will see results. You may not see results in your first loss or your first winning trade. You may not see results in it. You see what I'm saying? But after a while, over time, you will begin to notice that, oh, your portfolio is depleting, right? So you have to be able to follow your training plan, right? Follow your training plan, and even though it does not seem like you're about to execute because you're following your training plan, follow it, because like I said before, if you win a trade that is outside of your training plan, it is a bad trade, because tomorrow that trade could go against you. That's how the market is, to let you think that you are doing the right thing and then to go against you, right? So on Euro USD, USD is the only pair we're trading. On Euro USD, we're expecting a pullback, and we can see that we're already having a pullback. And if we take our Fibonacci, I don't know why the network is acting up, but if we take our Fibonacci from swing low to swing high, like so, yeah, like so, you would see that our area of interest and our price 1.170000 is also in confluence with our golden zone. This is the golden zone. So we're expecting the markets to pull back into the head and shoulder. So this is what I'm saying, right? This is what I'm saying right here, right? Lower low, lower high. We came and we tested the left shoulder, and then we could use the neckline to for additional sales. That's the same thing I explained in a couple of minutes ago in the beginning of the video with the diagram I just drew, right? So we're expecting to come into this level and then drop from there, but we would not be executing the Euro USD until the DXY is ready. Now, this is where the DXY comes in. The DXY, like I said before, is the dollar index. Everybody knows this. This is the United States dollar, the DXY, right? So if the DXY is not ready to move, the DXY is not trending, nothing is trending, right? The DXY says, I'm not trending today, nothing is going to move. Trust me, even when the Euro USD has gotten to your area of interest or your support or resistance, and the DXY has not gotten to its own support and resistance for it to make the bounce, the Euro USD will consolidate in that area before and wait for the DXY. Trust me, if you backtest, you will see. The USD will wait for the DXY to get ready before the Euro start moving. The GBP USD as well. right? So it is important to add this because you need an edge in the market. It's what I'm saying to you. We are way beyond our depth here when it comes to the forex market. But we are able to achieve a little off the market because we have an edge. We have a proper risk management strategy, right? It's something to we have a proper risk management strategy, and then we have a proper trading plan. We do not break it for nothing, right? And then we have the DXY to lead us in the in direction of the Euro USD. For more time, I've taken losses on Euro USD before I started using the DXY, and then even though the direction is right, but the entry will be wrong because why? It will be a premature entry. So the DXY is that one tool that helps us. It is important. It is an edge in your market. You need an edge. It's just something. So this is not coming from me. It's coming from people who are way more successful than we are, right? So the DXY is basically having the same pullback, and that's good, right? We're expecting the DXY to come into this level right here, 98.500. You can see these are around psychology. These are bank levels. These are turning points in the market. I don't call my levels support and resistance or demand and supply. No, 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 no. I call them turning points because I get my levels from the higher time frames, from the daily, from the weekly, maybe from the monthly. So these levels that I buy off of or I sell off of, I get them from the weekly time frame, not even from the 4 hour time frame or from the daily time frame. So these are turning points. So the moment I see a double bottom forming on these price levels, right, I immediately anticipate a reversal, and that's what we're able to do with the real USD and GBP USD because it was giving reversal patterns at those levels, right? So, and if you go also to the Candlestick Bible, you would also see it's written there turning point. That was how I was able to decipher what I needed to understand turning points. I don't just see them as support and resistance. No, I see them as turning points, meaning they can overturn the trend of the market immediately whenever they get there, whenever a chart pattern forms. Right? I used to think, oh, the market has to come into these levels, before it starts to reverse again. No, these levels can turn the trend, the other direction. But moving forward, let's not get sidetracked. On the DXY, we're expecting a pullback, right? Just like the Euro USD, and it is so perfect. You can see how the golden zone, right? This is what I'm saying, right? You can see how the golden zone is also in confluence with our, turning point or support and resistance, whatever you want to call it, and also in confluence with one psychological number, right? So you can see like this, we are building a lot of confluences, to be able to give us confidence in executing the trade. Now, more time you will notice that whenever you execute the trade in the right direction, you see the stop that. That is where you have to be able to understand how to place your stop losses. Even I still fall into the trap, right? A 2 to 1 is perfect, right? Because we tend to want to get the huge gains, 4 to 1, 5 to 1. Yes, they come, but they do not come as often as you would think, right? The 2 to 1 is very important, right? Losses are the only thing that are going to make impacts in your account. Profits don't make an impact in your account, right? Profits come when you do the right thing, right? Losses make an impact in your account because you are deducted, and whenever your account is depleted, you're done. You have nothing to leverage, right? So for trading, you need to be able to understand that you are going to calculate your losses first and not your winners first. So that's why whenever you calculate your lot size, you have to put in your stop loss on the loss size calculator, right? So you have to be able to have a wider stop loss because we are swing traders. It doesn't really matter if we are swing trader or not, but everyone should be able to have a wider stop loss so they can be able to, enjoy the free space because the markets will go against you. The markets will do what they want to do. So we're expecting the DXY to come into this level, 98.500, and then would immediately it touches. Hear me, immediately it touches because that's the exact same thing we did here. Immediately the DXY touched, and then I saw a bullish engulfing. I then went to the USD to plot my to look for entry strategy, to plot my entry strategy, break of standard channel and break of structure. I don't look at the Euro USD, at all. I look at the DXY. Immediately the DXY touches, I then go to the Euro USD to look for entries. You know what I'm saying to you? So this is the plan for next week. It may not even happen next week. It may happen, the other week. It doesn't matter. It is important to have a plan. You fail to plan, you plan to fail, right? So it's important to have a plan. It's important to come into the market. Come now, I'm going to say something. Right? More time, right? Whenever we come into the market, We come with a plan, we come with a strategy, right? And then we start seeing the markets doing something different. And then it's enticing to us because it's tempting to execute because it looks like something you would make money off of. It's wrong. Stick to the plan. I'm telling you, I'm talking from experience. Stick to your trading plan because I would rather take a loss with my trading plan than break my trading plan and take a profit. I'm telling you, that's how structured you have to be when it comes to trading. You have to be disciplined like so. So for Euro years and the DXY, this is the projection, and I hope and I pray that everyone has the same projection. Because we are bullish right now. The DXY is looking bullish. And also, yeah, on the weekly time frame we have broken structure. We have broken the neckline rather of the chart pattern. So you can see that the trend is about to shift. It's about to shift. So we need to be realistic with the trend. We need to adjust with the times, right? We broke the neckline from the double bottom. That's all you need to see. On the weekly time frame, that's all that needs to happen. And now we're expecting the retest of the neckline from the lower time frames, and then we can buy to the upside, right? The news, listen, the fundamentals will always follow the technical, always. You see what I'm saying to you? So do not bother if there's a news or anything or something's happening with the crypto market right now. There's a dump. Just focus on what you see. Focus on what you see. It's important to focus on what you see. We tend to let noise from outside, disturb our, our ideas and our plans. Oh, someone is buying and you're looking to sell. It gets to you, yes, but by the time you follow stick to what you see, right? Because he may be seeing something different and you may be seeing something different, right? So stick to what you see. Do not Trading is personal. It is very personal. Do not look left. Do not look right. You know what I'm saying to you? I try my best possible not to take signals and give signals. I try my best possible not to let my mates trade affect my psychology, right? Oh, he's buying right now and I'm not buying, right? He's selling and I'm not selling. He's trading and I'm not trading because I'm waiting for something, but he's gotten entries. That does not matter to me. Trading is personal, right? You may not even know he may lose both trades, and you the one trade you've been waiting for weeks, you profited like 4% return. That's how it is. That's how it is actually, right? So for the Euro USD, my entry would be, I'll be looking for a bullish engulfing or a break of counter line because the way I'm looking at it right now, I'm looking at it like it may not give us structure to plot our counter trend line on the 4 hour time frame. Now, the higher the time frame, the stronger the signal. I would choose a 4 hour time frame over a 1 hour anytime. So if the market decides to come here and gives a bearish engulfing, my stops will be above here, my take profit will be here, and it will be a 2 to 1, and I'm done. 2%, I'm done for the week, right? You need to understand that the big banks, they don't really aim to make 10% in a month just because prop firms want us to pass, and everybody wants to pass on time to make money on time. But big banks, the hedge funds, they come out with 12%, 20% a year. You see what I'm saying to you? And that's something that somebody may make in a month. It is not healthy. It is not. When you go to meet investors, they'll take you as a risk taker, right? The first thing you have to do, the first thought that comes to your mind is not how much you're going to make. Some people, they put their stop losses and then they project the 4 to 1, 5 to 1, 7 to 1. No, you have to think to yourself, if I take this loss, can I accept it? Can I go to bed at night knowing that this trade is open with this amount of risk? You see what I'm saying to you? You have to think of your losses. Think of your losses and learn from your losses. I'm telling you, everything I've learned, or most of the things I've learned, are not even from my mentors, they are from my losses. And I thank God for that because He teaches me. So have a great week. I pray that everyone follows their training plan. That's all. Follow your training plan. That's all we have over the market. Our training plan. That's all. We have nothing else, right? So have a great week. Ciao, ciao.